The broadcast is now starting. All attendees are in listen-only mode.
Hi traders, welcome to the live webinar with Admiral Markets. My name is Chris. Today we're going to focus on moving averages and fractals and continue with what we were also looking at yesterday, Fibonacci fractals moving averages. And looking forward to that. We can take a look at the usual instruments in the financial markets, of course. As you know, though, we have two disclaimers to discuss first. One is explaining the fact that this webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if this webinar is suitable for you. And also, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, so let's take a look at the charts. Let me pull over these charts right here. There we go. Thank you, Angel. Good to see you too. Doing very well, thank you. Everything's fine. The weather is actually pretty warm here, so it's Prague is typically cold in January. I mean, not dramatically cold. Like average is like between -3 and 2, around 0. But it's been a pleasant 5 to 9 degrees, so that's good. Birds are chirping, flowers are blossoming even. So I like spring, so for me that's perfect. The shorter the better. So that's good. How about you? How are you? We're going to be taking a look at the euro dollar. I'm here on the CAD yen 4-hour chart because I took a short on the CAD yen at this zone right here. Good momentum to the downside, and the trade was based on the fact that the momentum will continue into these purple lines, into these zones. I'm not sure if we discussed this yesterday, in fact. Does anyone remember? I'm not sure. Anyhow, yes, traded discontinuation lower. So that was one of the trades I took today. With regard to the euro dollar, it did make a bounce at this 50 fib. And a pretty good bounce. We never know, how it necessarily will bounce. So I know that Netta took the trade to the upside. In fact, I took the trade to the downside. I took this break, and then I took this bounce. So you can see how we nicely combine our forces to catch the trades up and down together like this. Uh, my trade was, as you might know, my trade is a little bit longer term than it's a little bit shorter term, but still good combination here. And at this moment, I think it's a tough spot. When looking at prices moving away from the moving average, there could be a continuation higher due to the bounce and overall uptrend. But then, if we look at this big resistance level, I think price is going to struggle after, as it goes higher like this. So this is a spot that I don't think is particularly that appealing from my perspective. All right, 50 fib. There might be a little bit of follow through. Let me take a look at this template quickly. I would probably be skeptical a little bit because of the fact that this downside was pretty strong. So there could be a more bearishness due to that. I don't see any particular. It could be that this is the correction and it's upside now, but I would probably, for the moment, sit on the sidelines with the euro dollar. Okay, let's take a look at gold and we'll take a look at the others soon, no problem. Let's see. Because Angel is looking, or he has open buy positions, and well, it depends where you are, I guess, in the trade. It could still move up a little bit higher from my point of view. There is a potential for price to move lower. There should be sound. Does anyone else have no sound? Do you hear me? There's one person that has sound problems. Do you hear me? Okay, great. So there could be a little bit of push up still towards this zone. Ultimately, I think there's more of a potential for bounce in this zone to retest the support levels. This morning, let me check that. This morning, you took a buy position, so that's around here. So that's great. I think you can move to break even, and if it goes up, it goes up, and if not, then it doesn't. I think, right? If you took it this morning, so that's a good spot. I'm not sure if it's going to get up to these levels. It did try it, indeed. It's now making a rejection. It could be a pullback from upside. Difficult to say at this moment. It's a slow move. There's a good chance, I guess, that it will make it upside towards resistance, but I think that moving to break even probably makes, I would say, the most sense. All right, pound dollar. Made a little bit of continuation. We already talked about the fact that the pound dollar does not have much space to the downside before it hits support anywhere 134.50, 135 could be being bouncing spot, and it did bounce at 134.80. So boom, it went up, and maybe you took a reversal trade in this area, perhaps. We're talking about the fact that this could uh, make an ABC correction. I didn't trade this one. I traded the pound yen downside, which went for 135 pip win, CAD yen downside to. I didn't trade the pound dollar myself, but yeah, we did discuss it. Could be a bouncing spot. This is still that this zone could have been a bouncing spot, and it was. And it could still be a breakout, I would say. At this moment, I wouldn't trade it, but if it breaks out here above the weekly pivot point, yes, there could be continuation up to the R1, up to the R2, and R3. All right. If it breaks to the downside, if it breaks below S1, it would depend on what kind of candles we see as it challenges this long-term moving average. If we see strong bearish candles like this, it could indicate a follow through to S2, S3. Maybe strong candle, a little bit of retracement, and follow through. All right, dollar yen, good momentum, could be good for a bear flag. If we get a bear flag like this, that would be neat for a continuation lower. So anything that would look like this, 13, 25 candles like that, looks good for continuation. So as long as price moves like this and then breaks, I think could be good because this is strong momentum, very powerful candles, large candlesticks, and definitely strong momentum. So I don't think that there's any divergence yet, and larger support levels haven't been hit yet. I think there's still space down to 111, 110.50, 110. So if it makes a little bit of a retracement like that, then breaks could be great for continuation, I would say. All right, Ozzy was thinking maybe of a reversal trade if price were to have two daily candles in a row. It did. So technically, it might be a reversal trade here, but prices has been so far going sideways like this. A little bit hesitant. It looks more like a continuation of the range. As I said, the Aussie is a very slow mover, so it's a little bit sometimes difficult to trade this particular pair, specifically with reversals, I would say. So doesn't look that great at this moment. We might take a look at lower time frames. Yeah, it looks more like a bull flag to me. I'm not interested in either way. There's divergence between these tops, but price is not moving lower. The MACD is all flat. I don't see enough energy in this pair at this moment to trade it. I think that would be proud for the Kiwi too. It did make an upside. They're not the most interesting trades, I think, for the moment. Dollar CAD is something that looks better to me. I think this is something that makes more sense. Prices in this channel had a good break. Also had two daily candles in a row that are up, and retracement looks good for continuation, I would say, at this moment. So target could be, let's put a fib from here to here. Could be the 38, around 125.60, maybe even up to 126.30. So far, what I've seen at least from the pairs, let's see, euro dollar risky, I think very close to resistance, potential ABC. Not sure yet. I need more evidence. I need more price action. Pound dollar would be okay if there's a breakout or strong candles to the downside. I'm open to trading it, but need to see some more development. Dollar yen is looking the most interesting so far. If there's a bear flag on the outer trading continuation, Aussie and Kiwi do not look interesting. Dollar CAD could be a reversal trade. I'm not a big fan of reversal trades, but does look something more appealing. So that's a quick recap of the first six or so currency pairs. Let's take a look at the euro yen. Euro yen still looking strong, I think. So if they're, from this point of view, you can see that as long as the momentum is available on the 4-hour chart, most of these patterns break to the downside. So it could be happening here too. One, two, three, four. So there could be a small continuation still remaining on lower time frames. I mean, don't expect the world, but because the daily chart is already so massive, and that's a little bit risky with intraday trades that try to catch a small part. It could fail too. It could fail to break this bottom and just consolidate. If it does break, 133 would be the target, right? Very small target. But there's a 50-50 chance that the price could just go like this and consolidate, and there could be one more break and continuation. So yeah, that's part of the risk I think with intraday. It's already a pretty large candle. It could become a little bit larger, but it is a bit risky I think at this point. Euro was thinking about a reversal trade back to the resistance in this falling wedge. It has moved halfway, but not gotten there totally as yet. And it's kind of losing its steam a little bit. It might be a bounce trade, but it's a little bit risky at this moment. It could be something to think about, but I would need to see price a little bit failing to break this support trend line here at the very minimum. So I would like to see price hit it or not hit it, but then maybe kind of stick around here and then break a resistance trend line like this for an upside breakout. That could be a reversal trade, but otherwise I would be cautious for the moment. Euro New Zealand took this breakout trade and still have a stop loss above these fractals. In fact, pound yen took this trade on this candle. That was a quick one, if I remember correctly. No, it was this one. To the downside. That was a good fall. And it could continue further, just like the euro yen, if there is some retracement like this. Right? We'll get a couple of candles on the 4-hour chart, maybe retrace halfway, and then still possibility for continuation. But eventually, when we get a lower low, it could then get a retracement higher. It's possible. There'll be divergence between these the bottoms, right? So, all right, pound dot I think is actually in an interesting territory for potential downside. This looks like a break, pullback, continue. So it could be a swing trade to think about. Best stop loss is above these tops here. Price has already moved a little bit away from the break pullback level. So the R2R is starting to become a little bit less interesting here. But it's still okay, I guess. Right? Anywhere here or a little bit of retracement, maybe on the next candle, would help that R2R. So pound out looks, I think, interesting for continuation. That would indicate pound weakness more than euro weakness, perhaps. Let's see. Well, as I said, I'm not so sure about the euro odd upside anyhow, so that doesn't really influence it that much. Otherwise, for those that took maybe the odd cat breakout, I didn't, but that was a little bit of a triangle there. It did break to the upside, so great job if you took that. Odd yen. All right, talked about that yesterday. Bearish candle. If there was a good candle, this candle is okayish. It's not really fantastic. Let's take a look at the high and the low. The high and the low difference is 98 pips. The close is 26 away, so it's okayish. And if we look at the retracement, almost at the 38. So it depends. Now obviously the 38 was missed. So if you have a pending order there, you would miss that. If you took this breakout, then you would take it a little bit lower, but still a pretty good trade. So that could have been one way of trading the odd yen. We did talk about odd yen yesterday, so maybe. But I was already in the CAD yen and pound yen, so you don't want to overtrade either. But this could have been an option too. Already, otherwise. Tesla still hanging around here. Facebook 2, Amazon, making some small retracements here. I think if they make bull flags, that they probably would be ready for continuations, I would say, for the moment. Pretty strong upside, pretty strong momentum. Well, one last push because we can see already the MACD line is a little bit closing in that gap, which means that we might get into lack of steam for the moment, but I think one more push is okay still. All right, DAX having problem with the 78.6 fib of this move down, and you can see price is still respecting those fibs. Now continuing with the uptrend like other US stock indices. Angel still asking a follow-up question. Gold, I think, is close to resistance, but could make that last push up to resistance indeed. So it could make that push up to 1330 indeed. Oh, you're 1375. Wait, that's way higher actually. Well, if it goes to 1375, then it's possible. It's still in a resistance zone. Anywhere from 1330 to 1370 is resistance zone. If it breaks with a good weekly candle above that zone, that's when I would say, okay, this is probably breaking to the upside. Otherwise, any level like that could still send it down. It could be 1330, it could be 1340, it could be 1350, it could be 1370. I'm not sure which of these will hold, or if any of them will hold, but that entire zone is pretty heavy indeed. But I don't think it necessarily has to go to 1370. I think it could stop at lower fibs as well. All right, so to recap, I think pound odd looks good. I think dollar CAD looks good. I think so pound odd downside, dollar CAD upside in my view at least. I think dollar yen could look good if there's a correction continuation. CAD yen, pound yen, I've closed myself. Euro New Zealand with a trail stop loss. Euro odd I closed. Euro New Zealand and Euro odd both downside. Euro odd could be a bounce to the upside, depends on what's a reversal idea. Pound odd downside. Anything else? Euro yen, pound yen, maybe if there's a correction, just like the dollar yen, could be followed through to the downside too still. So that's a quick recap. S&P 500. Making some kind of channel to the downside. Looks like it's getting to the long-term moving average. It's having some struggle with the Keltner channel, as you can see. We had a breakout here, but the breakout isn't getting any follow-through as yet. So if it breaks above this resistance trend line, there could be a continuation breakout to the upside. The 4-hour chart is not looking that great actually at this moment. Tricky. Would maybe rather sit on the sidelines actually. I don't know if this is going to be a small correction or a big correction. I don't dare to say, so I would probably rather sit on the sidelines. All right, that's my 2 cents at this moment. Do you have any questions? Anything you want to like to take a look at? The webinar is focused on Fibonacci, fractals, moving averages, and what I like to use in my system is basically you see either one or two moving averages, right, in the webinars, but I myself like to use way more. In fact, I like to use at least four. Sometimes I use even six, but they really, six or four, it doesn't really matter. I would just add one here or add one here to give a little bit more of a context to the zone. So I use a short term, or as I say, medium moving average zone and a long term moving average zone and a short term for the momentum. And it's great to show where price makes pullbacks, where is it trending, where is it reversing. And it's very, very easy to dissect price. Obviously here price is breaking out and trending to the downside, right, in this piece here. Here we are obviously breaking above the short term, but heading back to the long term. So that's a retracement trade. Here we're obviously reversing as price breaks into the new direction, right, and starting a new trend. Here price was obviously ranging. When you look at the moving averages all lined up on each other. So it becomes very easy to digest it. And the fractals help identify that too. The fractals are giving extra kind of information with regard to the fractal, how the fractals are situated versus the moving averages. And it gives a lot of info. We talked about that in the past as well. And basically, if the fractals are below the moving averages in a downtrend, that shows a very strong trend, right? Fractals above the moving averages in uptrend, that shows a very strong uptrend. Fractals in between, right? That shows reversal. It's extra confirmation, basically, right? When you get fractals here at the 21 EMA, there's an extra confirmation that price is making a bigger retracement and that the downtrend is not continuing lower, right? If the downtrend would continue after a breakout like this, and we suspect that the downtrend will continue, we would see fractals emerge at the 21 EMA, like here. All right, so that's how we can assess and analyze that. So very important for multiple reasons. MAs, all kind of factors that have nothing to do with crossovers, right? That help indicate the path of least resistance. Here, we understand that the path of least resistance is to the downside until it hits a support level that price cannot push through. So it is really like analyzing the flow of water, and we can do that much, much better with the moving averages. We can dissect and understand that path of the least resistance in a much better accuracy by using these moving averages than without them, in my opinion. So it's a lot more than crossovers. Crossovers are for beginners and use it as entry exit. Moving averages are much more valuable when analyzing the chart and looking for and understanding the charts and understanding what is the most likely path that price is going to make. Here, we know that price is probably going to make the upside to the long-term moving average, right? When we have a fractal here that is above those moving averages, we know that an uptrend continuation is likely. Same for here. Fractal below those moving averages. Fractal at the 21 EMA. Then we get divergence between these bottoms. So we know that, hey, look out, there could be a reversal eventually. These are all things that help. So moving averages, we can analyze the space between these moving averages, the space between the 21 and 144 EMA. We just see it become bigger and bigger, right? But eventually divergence will be created, and then of course price will fill up that space to make that move back to the 144, because when divergence patterns appear, there is a good chance that price will go back to the long-term moving average or beyond that. The difference is that if price goes back to the long-term moving average, it's still a retracement, a deep retracement, but still a retracement. The 21 EMA is a shallow retracement, whereas a break above it would be a reversal. Besides the space and the divergence, another factor is how many candles are not, are moving away from the 21 EMA. Right? So here, for instance, 39 candles. That's a huge momentum. right? So typically when we have 5 to 10 candles not touching 21 EMA already, then there is a good chance of continuation up to about 20. And after 20, there's a good chance the price will go back to the 21 EMA. This one case, it took 39, so it was a lot longer correction. A lot longer push up. So when you're in a momentum like that, and prices, the short-term moving average is bullish and prices away from the 21 EMA, you can zoom into lower time frames and try to catch part of that ride to the upside. All right, so that's another factor that we can add. Price breaking through the 21 EMA or the 144 EMA. Here we have a breakout above the 21 EMA. Here we have a breakout above 144. Both breakouts indicating upside. Here we have a breakout below the 21 EMA. We have a little bit of downside. So not every break, of course, goes equally far. It does depend on the context. Sometimes you have a break, but it's just a retracement, and price still continues with the old trend. Here we have a range. Here we have breaks of 21 EMA often, but it's a range, so it doesn't matter that much, right? Here we have a break of the 21 EMA, but it's doesn't go anywhere. It almost hits the 144. It's still in a downtrend. It just doesn't, it doesn't make the downtrend disappear. It's still fighting to perhaps make a reversal, but it doesn't manage. It fails and moves down. So this is a break of the 21 EMA, but it didn't matter much, right? Just went up a few pips only, and then went down again. So not all breaks are equal. We have to understand that sometimes retracements go a little bit deeper. In this case, this was still a bearish retracement. So the context is important. Everything helps with reading that context. Patterns, fibs, trends. All right, but generally speaking, you can see that as price broke below the 21 EMA here, besides this small push here, it was, maybe here, it was the breakout of 21 EMA led to a great downside. And here also, breakout candle, downside. Here, breakout candle of 144 EMA, upside. So, I mean, trading the break of the 144 EMA is not something that must be done necessarily all the time. I'm just giving you examples of info that could help us. It's part of the info, not a standalone system. Part of the info that helps us is when price breaks through the 21 or 144 EMA. It's an extra piece of information. And of course, if it breaks the first or second time, is a difference. First time it's a little bit riskier. Second time is less risky. Here's the first time price breaks above the 21 EMA. Here, price didn't go anywhere. The second time was better, right? Yes, the crosses to some degree do matter in the sense for analysis, not for entry. So when here price crosses below again, that does kind of confirm that downtrend, right? Same from here, that confirms the uptrend. So it's a piece of info that helps. And the fractals, where are the fractals versus the moving averages? Here the fractals are at the long-term moving average, so that's still a bouncing spot. But now the fractal is at the opposite side. Price broke below it and hooked back to it. So one fractal at the moving average is key support, the other is key resistance, right? And doesn't mean that the price would not break through it. This was key support. The price did bounce, but eventually later on broke below it, right? Those things happen. But those fractals at those 21 and 43 EMAs are kind of critical levels. Here you can see price still bouncing, but then breaking and hooking back and bouncing to the upside. In fact, using a fractal as support. So the fractals at those moving averages give us a lot of info. Here, fractal at 21 and 144 EMA, right? It gives us a lot of info that the downtrend is in play. All right, so those are the 6 most, I would say, interesting parts of looking at moving averages. And of course, there's a short-term moving average as well. I didn't even include that much in this analysis. That's maybe even a separate topic again. And you can use it. This is HMA. You can use it for confirmation of that continuation of the trend, for instance, here, right? It's good for the flow in a way. But besides that, you have fractals versus the moving average. You have price versus the moving averages. You have moving averages versus the moving averages in the sense of crossing space, number of candles not hitting the 21 EMA, and divergence, right? So those are the key 6 things that help me analyze the charts and understand the path of least resistance. And yes, I do use wave patterns as well, but I actually think that these moving averages are more important because they help me understand waves also better. That's the whole gist of it. So by analyzing moving averages, I also know to analyze the waves better. So the moving averages are the base for much of my wave analysis too, right? Or at least part of it. Maybe we can take a look at an example to, let's take a look at a winner because it's always fun to look at a winner. So, one second. All right, so here we had a higher pound yen. We had a higher high, but we didn't have it on the oscillators, right? Let me quickly add ACS MACD. All right. So divergence between, on the oscillator was clear, I already showed you, right? Clearly divergence, well, you don't see it now, but one second. Right, clearly divergence. All right, so that was clear. So we don't have to look at that anymore. We had that already. Then we can see momentum to the downside. We're not momentum as yet, actually. Yes, here price was gaining momentum on my Fisher and MACD. All right, so things were aligned for that, and we had a breakout. We had a breakout of this trend line and the moving average. So this is why I took this breakout trade right here and was aiming for 151-ish. So this is an example where we have multiple things. We have divergence. We had not so many candles touching the 21 EMA, about 11. So that doesn't look that strong. Plus we had divergence. Plus price was breaking below 21 EMA and this trend line. Oscillators were confirming it. Price was going into the zone, into the space between the moving averages. So there was at least some space to the long-term moving average. So, there was some space there. That's good. What else? We didn't have this fractal yet, but that's okay. We were below this fractal though, at least, right? So we broke below that already. So that was a lower low. Yeah, that's about it. So you can see how that worked out in a live example. All right, so let's take a look at our Admiral Markets template here with the Keltner, and you can see break below the weekly pivot point, right down to S2. Great stuff, right? And when the breakout happened, there was still plenty of space down to Keltner, and eventually price kind of stopped at Keltner, but then broke below it and continued lower. And now it could go lower. It is below the Keltner. It looks like a very impulsive S3, maybe even 150 round level, and then it could make a retracement or some correction, right? Then it has already made quite a substantial down move. So if you're interested in this Admiral pivot point or Admiral Keltner or the mini terminal, best is to go to admiralmarkets.com, check out our webinars by going to Education, Forex, and CFD webinars. After that, feel free to go to Platforms and MetaTrader Supreme Edition. It's a special Admiral plugin developed by Admiral Markets with 60 plus extra features. In fact, a few of those, as I just showed you, included. So feel free to try that out and download that. If you're on the website, I would recommend taking a quick look at our analytics from Netted and myself, technical and wave analysis, and also check out some tools like the market heat map, sentiment, articles, and in the educational section, of course, you have a lot more courses and stuff like that. You name it, right? That's all here. That's it for today. Thanks for joining. I hope that we got some good trades this week, that you did too, and may many follow. In any case, be careful with the risk, of course, and trade small things, trades so that you keep the risk limited and can trade despite losses still next day. And talk to you soon, all right? Cheers.